All right, so on the Money Show, we are putting the spotlight on the importance of financial independence. On the show today, we have on board Dino Morea, actor and entrepreneur, to understand his relationship with money and how he manages his finances and how did his journey as an entrepreneur began. Let's take this discussion ahead with him. Dino, welcome to the Money Show, and yes, I would like to tell you that this is not like a Bollywoodish interview, and we are going to talk about your money on a business channel. So how does that feel?
I enjoy them क्योंकि जब हम पैसों की बात करते हैं, I really enjoy it. I've always wanted to work hard and make a lot of money. तो जब कोई पैसों के बारे में बात करते हैं या स्टार्टअप्स या फाइनेंस के बारे में बात करते हैं, it's quite exciting for me. और मैं हमेशा ये जानना चाहता हूँ कि what's being done all over the world in terms of tech, in terms of entrepreneurship, in terms of नया स्टार्टअप्स वगैरह वगैरह. So it really interests me. हाँ, मैं तो बॉलीवुड से ही हूँ, फिल्म इंडस्ट्री से ही हूँ, और even though films are my priority, I look at other avenues. So इस तरह की बातें अगर होती रहती है, for me ये तो काफी exciting.
Exactly, Dino, it's definitely very exciting. But then let's talk about your entrepreneurial journey, because we all know about your Bollywood and your modeling career. But then you are a very successful entrepreneur also. I just wanted to know that have you been entrepreneur by heart since the very beginning? What's the story behind it?
Actually, ये सफर मेरे लिए ये शुरू हुआ जब एक्चुअली when I was an actor. उसके बाद, क्योंकि उसके बाद ही मेरा नेटवर्क काफी बढ़ गया. और मैंने से नेटवर्क कहने का मतलब ये है कि I met a lot of people जो बिजनेस वर्ल्ड से जुड़े हुए हैं. And my first venture was actually with my brother. We started cafes and restaurants. क्योंकि वो एक शेफ था और वो एक रेस्टोरेंटर था, तो इसलिए हमने सोचा कि दोनों मिलके क्यों नहीं एक नया रेस्टोरेंट बॉम्बे में शुरू करें, मुंबई में. And that's how it all began. It all started. But if you ask me about me and my ambition of wanting to make money, ये तो बहुत पहले की बात है. जब मैं स्कूल से 11th स्टैंडर्ड में था, 11th और 12th जब मैं बेंगलोर में था, तब से मैं कुछ ना कुछ करता था. जैसे वो there were these survey forms which used to be market surveys. तो मैं एक कंपनी के लिए काम करता था जहाँ वो मार्केट सर्वे फॉर्म्स हम लोग लेते थे, और I used to go door to door filling up those forms, और हर एक फॉर्म के लिए 10-15 रुपए हम लोग मिलते थे. तो दिन में तकरीबन 50-100 फॉर्म्स अगर भरते थे, we used to make that money. So my chase for trying to make money has started very early in age, but getting into proper business वो शुरू हुआ तकरीबन 2002 या 2003 में, जब हमने अपना जो पहला रेस्टोरेंट हमने खोला था. It was Prep Station in Mumbai, and then we opened a chain and then a bar and so on and so forth.
So, Dino, we can, it's safe to say that, you've always had like a good rapport with money. You just knew how to navigate through it, and you always had that thing of, maybe experimenting your skills in order to make money. But then, is it just restricted to the hospitality sector, or you are also focused on other sectors as well?
Just to go back to your first statement that I didn't know, I learned along the way. जब पैसा आने लगे, जब मैं पैसा कमा रहा था, तभी मुझे लगा कि what do I do with this money? How do I make it grow? So I used to read a lot, and I learned along the way. When we started our first business in restauranting, income started coming in. Then we had to expand and use that money to expand, and we built the business that way. और तभी मैंने ये सब सीखा कि कैसे करना, क्या करना, इन्वेस्टमेंट्स कहाँ डालना, पैसा कहाँ डालना, ताकि वो पैसा थोड़ा सा, मतलब 100 रुपए कैसे 200 बन जाते हैं. How does it grow? How do you grow your money? And where does one invest? So hospitality is not the only business. I invested in a couple of startups. मैंने खुद जब 2010 में जब मैंने एक छोटा सा ब्रेक लिया एक्टिंग में से, then I invested in 2 businesses which I actually tried to run in terms of trying to make it work. There were 2 startups. एक company थी which was called Cool Mal Merchandising, which was we wanted to do celebrity merchandise and sell it. And I had signed at that time Yuvraj Singh and Mahendra Singh Dhoni, and we tried to make really cool merchandise of these two popular sportsmen and sell them offline. At that time, online wasn't really popular, so we tried to sell them on offline. But it didn't work out the way we perceived it to work out, the way we envisioned it to work out, and unfortunately, we had to shut that company. So there were two things. There was another e-commerce company also, which me and my partner started. It was called iBhakti, and there we were trying to reach out to temples and get people to, यहाँ हमारे देश में लोग मंदिर जाते हैं, they love the prasad from the temple. So हमने काफी temples के साथ tie up करने की कोशिश की to get people who live, Indians who live abroad, to get that prasad from that particular temple and used to send it over there. So we started this really cool website and app where people could do this, and it was working really well. But क्या होता है कि we try to raise money also for it, but tying up with temples was a bit of a problem. Even though we were sharing revenue with the temples, हमारा ये मतलब था कि जो आपके मंदिर तक नहीं आ सकते, we are doing a service for them by taking your prasad from the temple and sending it to them, and they feel good about it. So and they will pay for the prasad. Eventually, that revenue would be shared with the temple. So they liked the idea, but it was very tough logistically to manage. So that also we kind of stopped because the burn was more than the earn in corporate terms. So I've had these experiences. I've had these trysts with entrepreneurship. Some work, some don't work, but you learn along the way how to put money. And then thereafter, I started investing in a few tech companies which have done well. So I made some smart investments, some not so smart investments. But this is the name of the game.
So Dino, one very interesting thing that I felt in your answers is that your way to approach sectors is not similar. What's the reason behind picking up these sectors, hospitality, then there's this e-puja and the online gaming. How do you look at it? That's quite a unique basket. And what is the current investment? What's the current project that you're working on?
But unfortunately, when you go outside the stadium, people are selling cheap knockoffs of merchandise. So the unorganized sector in this country, unfortunately, for merchandise is huge. So उनके साथ compete करना बहुत मुश्किल होता है. So I'm just giving you a small example of why certain things don't work out. But having said that, I chose certain sectors because हमें लगा उस समय कि यार ये sector काफी hot है और अगर इस पे हम पैसा डालेंगे और if we do a good business, it could work. Or the idea of starting a business also and then to hopefully try and raise a Series A or a Series B of money, that whole process came into play. But we had to show, the books obviously have to be healthy at that point. Our books were not so healthy, so we couldn't raise our first round. That's why, some of these companies started in stock. At present, movies ke alawa, I also produce. So for me, because I've been an actor for so many years, मैं production के बारे में काफी कुछ जानता हूँ. मैंने already दो films produce किए हैं. So I know how the business works, and it's really interesting. But besides that, I've got my hands in this fresh press juice, a company which I've, because I feel the health sector in terms of nutrition, food and nutrition is really good. So I've got fresh press juice. We've got it's a really fun company we've got because हमारे यहाँ these what's it called, the gym, the health in gyms. I'm trying to get into something to do with health and fitness in gyms, and I don't want to say too much about this actually because it's quite an exciting space, and we're starting something really big in this space. Then I've got investments in a few tech companies, which I can't actually reveal at this point. But these are really cool tech companies which the startups, and they're just about making their foray into the business world. So if all goes well, all these interesting investments should at some point be fantastic. I'm really looking at the health. I'm looking at fitness. I'm looking at tech in a big way. काफी लोग ने मुझे 2 साल पहले कहा कि यार क्रिप्टो और NFTs में अगर आप घुसेंगे तो शायद इसमें पैसा कमा सकते हैं, but I've never really understood crypto and NFTs to sort of get into it. So I go into places I do understand. I also I am in the stock market a bit, and I read up on what's happening, which stocks will work, what the climate of the stock market is. और आजकल जिस हिसाब से stock market चल रहा है, it's an exciting time.
So, Dino, I can safely call you a shark, and all those budding entrepreneurs listening to you right now might want to just spam your inbox with all kind of proposal and projects, okay? So just kidding over here. But then I just want to understand that, are you really a risk taker?
Yes, I mean, I do take risks. I do take risks because I feel if you don't take a risk, you never know. I do take risks. Some of them are calculated. Some of them are just, you go with a gut feeling. I've lost money also. ऐसा नहीं है कि हर risk जो मैंने लिया, I've made money. I've lost a fair amount of money also. But if I didn't take that risk, I wouldn't have understood businesses better. I needed to learn along the way. और ये सब करते हुए मैंने बहुत कुछ सीखा, especially investments, whether it's in land, whether it's in the market, or whether it's in startups or in companies. Because any company that I get involved in, if I have I have a small equity or a small stake, काफी लोग मेरे पास आते हैं और कहते हैं कि यार, can you help promote our products and stuff. So I said, okay, don't pay me money, just give me a share in your company, because जब मैं अंदर जाता हूँ, जब मैं involve हो जाता हूँ, I really help and try to market it and push it in the right way. So अगर मैं उस company का हिस्सा बन जाता हूँ, then for me it's also better to have skin in the game, to really get involved, because I know money will come at some point, and that's how I look at it.
All right, Dino, now let's talk about your personal portfolio, so major part of your investment is obviously you produce films, and then you have these companies in which you've invested. But then what about other asset classes? Like we've talked about real estate or maybe traditional form of investments, equity. What are your thoughts on it? And do you have that kind of an exposure in your financial portfolio?
See, when it comes to the stock market, I honestly, I do my own investments over here. Obviously, like I said, I read a lot. I find out there's so much information. There's so much information available today in terms of where one can invest and where one can put their money. Real estate is a great space. Depends on how sort of where you invest and what the incremental could be. The stock market at present is a fantastic place. It's I see India in the next 10 years is really going to boom. The whole manufacturing sector, with our Prime Minister pushing Make in India so much. I mean, all this information, like I said, is available everywhere. And if anyone just bothers to read, you really can. You do really well, especially in the stock market. And also the size of the stock market is increasing. There's so many customers coming in, so many individuals coming in and using the stock market, looking at companies, investing in private companies, which is actually making the market really robust as compared to what it used to be. So with all these fantastic things happening, this really the opportunity is immense. Even like I said, because I have a network, I know people in the startup space. काफी लोग मेरी तरफ देखते हैं और कहते हैं कि हाँ, we've heard that you're looking at investments in startups, so on and so forth. So I get offers to participate in great ventures. I've also invested in some funds. There are people who I know have great funds who thereafter go and invest in various, not startups, but in sort of the Series B in bigger funds, right? So I'm invested there where 7 साल बाद या 8 साल बाद शायद उसका return भी काफी अच्छा होगा. So I separate everything. My basket is a bit spread out, but I look into everything very often.
And Dino, now one more place where you can get all the recommendation and investment strategies is tune into ET now. But then what will be your message for all the budding entrepreneurs out there?
To any budding entrepreneur, well, my learning is obviously, you got to. It depends on how big you want to be. If you can look for a big problem and solve a big problem, I would say take a risk and go ahead and do it. whether it's in any sector, whether it's energy, whether it's tech, whether we're moving in, I mean, the way everything's evolving in terms of especially AI, the world and companies are evolving at such a rapid space. It's important to try and keep up. So any budding entrepreneur, if he wants to start a business or start something really cool, think of an idea where you're solving a big problem, because that's where the big money is, where you solve a big problem and it just make convenience easier for customers. India is a huge customer base, so and India is the right place to be. So I would say right now, take risks, make your dreams come true.
All right, interesting. Now, one last question to you, and I've been told to ask this question, okay? And this is about your age ka raz. You are just getting younger. So, what is the secret behind it, and your investment in your health?
There's something I am starting very soon, a new brand of something. Shayad usme wo raaz hai. But it's it's like there's something I'm getting into, which is related to health and fitness, which might make people just feel younger, look younger. I won't tell you what it is yet, but once I launch it, you will get to know. But having said that, what I do is I'm happy. I'm happy. I sleep well, I eat really well, and I take care of myself. वो सबसे important है मेरे ख्याल से, just health and fitness. क्योंकि मेरा ये माना कि अगर इतना पैसा भी कमाएंगे, उसके साथ क्या करेंगे अगर आपका हेल्थ ठीक नहीं है. So first and foremost, take care of yourself, your health, your mind, and if you're happy, be like me.
Definitely, Dinu, and that's a word coming in from you. Thank you so much for being on the show today and talking to us and to our viewers. Thank you so much. All right, we move on and we'll slip into a short break, but then post that we will focus on 40-year-olds and how should this age group in particular look at their financial goals, and maybe retirement is one of the most crucial financial goal for you at this time. We will help you plan out your investment strategy after this break. Welcome back. You're watching The Money Show with me, Kavita Thapliyal. So 40s are an important milestone in a person's life. It's usually the age when you are in the middle of your career and financially settled in your life. But when you are in your 40s, the amount of responsibilities are also higher. And so on The Money Show today, we have on board Aditya Agarwal, co-founder of Wealthy.in, to help you sort out your finances. Let's welcome Aditya. Aditya, good evening and welcome to the show. So 40, a very crucial age group where, few of us might be having few of their financial goals almost round the corner and getting completed. And then you are looking at retirement, or maybe if you're aware enough, you might have just started investing for retirement. But financially speaking, ideally, what kind of age group or what kind of space you should be in your 40s?
Nice, Kavita. Great to be here. Yeah, 40 is a great milestone, and I think some people often these days are saying 40 is the new 20, because with every generation we are looking younger as we age, right? But as you rightly said, it's an age where responsibilities are higher, very much higher compared to, let's say, even when you're 35. And but good thing is that you're well set in career, as you said. You probably have a very stable income, rising income, right? So I think I would say that when you're 40, I think the first thing that you should look at if you're sort of celebrating your 40th birthday, right? First thing probably you should look at is that do you have adequate life insurance cover for yourself, right? Because it's a time when your responsibilities are sort of set in stone, because by this time you have kids, you have probably a house, if you're planned for it, right? And maybe there's an EMI going on it, right? And you have parents who are aging. So there's a lot on riding on you, whether you are an earning male, earning female, whatever you are, but at 40, there's a lot riding on you. So I think first thing to do is probably evaluate your life insurance cover, that do you have the adequate insurance cover? Because what happens typically is that we take our life insurance cover when we are in early 30s. And typically at that age, we can only afford a small cover, maybe 50 lakhs, 1 crore, 1.5 crore. Right, but by the time you're 40, you should look at increasing it to whatever your affordability is, because your responsibilities have increased and inflation as well, sort of as is going to eat into that. So I think that's the first thing you should do. right, when you're into 40s. And as you rightly said, I think
Aditya,
at the 40s, it's a good
Aditya,
time.
even in life
Yeah.
insurance, how important it is to also evaluate the kind of financial liabilities you have, right now. Maybe if you've taken a life insurance when there was no home loan on you, and now that is the case, how should you make sure that these financial responsibilities are covered, especially in a life insurance or in a term insurance cover?
Right. So, no, great question. So, I think first thing you have to see is one, let's say, assume that you are a cash generating machine. What kind of cash you're generating month on month for your family. So, if you're not around any longer, do you have enough corpus that can generate as much cash, right? And second, of course, is that to that cash, essentially, you add all the liabilities that you have because you don't want your family to sort of, be responsible for those liabilities once you're not here. So ideally, I would say that there's a formula called human life value, which is a combination of the income that you need to replace plus all the liabilities that you have. You can actually search for it, and you can use that formula. It's a fairly simple formula to calculate what is the ideal term cover you have. I think thumb rule that people have essentially is 30-40 times your annual income plus your liabilities. I think that's another thumb rule that people use. Then whatever is your annual income, you multiply that by at least 30 times and plus your liabilities. I think that's a good formula also to look at what kind of term cover you need.
Right. So your insurance is taken care of, but also at the same time, Aditya, this is the age group when you'll be having, people will be having most of their parents in their senior citizen age bracket also. Time to review or look at their health insurance policy also.
100%, 100%, because if most what happens at this time is that your parents have some pre-existing disease, right? And if you essentially, the more you delay in getting a health insurance for them, the harder it will be for it to get it at the right price, right? Hopefully you already have a policy, so the best way to do that is probably increase. Let's say if you have a 5 lakh policy for your parents, increase that the base cover to 10 lakh rupees, let's say, and then add a top up to your parents' policy. That's the best way to sort of solve for good health cover, right? And a good thing is that if your parents are dependent on you, then you actually get tax benefit on that premium paid, right? So I think that's the advantage of also increasing your, whatever you increase it by, essentially that is tax-free income for you, right? So, but definitely look at increasing the life health cover. First base cover, at least double the base cover, at least bring it to 10 lakhs and add a top up, which can at least take your health cover for your parents to 25-30 lakhs, because the expenses are bound to happen with as your parents age. Right.
Exactly. So now assuming that your life health insurance and your family's health insurance is taken care of, next should be your kids' education goal that might be just coming up.
Yeah, I think we discussed it a few days back. This is the,
Yeah.
one area where inflation, prices are going to just increase, because, teachers' salaries increasing, land is becoming more expensive. So education and tuition is only going to get more expensive. So I think planning it for day one is very important. And the best way to do that is essentially two ways to do it. One is, first, let's say, assume that if you are going to send your kid for an MBA-based education in India, whatever is the cost today, right? If you're going to send them, let's say 15 years later, at least assume that the cost will become 2.5x by then. So if the course costs 50 lakhs today, it will probably cost, maybe more than 1 crore, 15 years or 18 years from now. So assume that, and basis that, essentially do a reverse working and figure out how much monthly SIP you need, because SIP is probably the best way to accumulate money for your children's education, because a children's education is typically 15 years out when you're at this age, or maybe at least 12, 13 years out, long enough time for your money to compound. Set up an SIP amount. It could be 10,000, 15,000, 20,000. Even if you do 20,000 rupees SIP, it should really help in sort of helping you generate the right kind of corpus 12 to 15 years from now, when your kid is ready for that education that you always dreamed of for him or her.
All right, but then also don't you think that if this particular goal is coming up in say 10 years or maybe 5 to 7 years time period, and this is the age when you are starting, or you just thought about or realized that you need a financial plan for this particular goal. So you have a child education goal as well as a retirement goal to work on, right?
Yeah, absolutely. But if your child, let's say if your child is 10 years old, right, you would obviously prioritize that if you haven't done it yet, right? So let's say if you're saving 50,000 rupees per month and you realize that, your child will go to a good college in 6, 7 years from now. So obviously the first priority that you have to give to is your is your child's education, and most likely, essentially, a lot of your savings right now will go towards your child education, right? I think on retirement front, as I think in investing, obviously the sooner the better. So you may not be able to allocate as much money as right now, but let's say, at least if you have, 80% goes towards your child education and 20% at least starts building towards your retirement corpus. Because I think one good thing about, at least salaried people in India is that we have this component of our salary called EPF, which we don't realize often, but, it sort of is growing at a reasonably good pace. It is something that we don't even see balance very regularly, so you could actually look at whether your retirement goal, part of it, can it sort of be funded by the EPF savings you have, and at least not commit to yourself that I will not touch my EPF savings for anything except retirement. I think even if you do that right now, if you don't have enough money to start saving for retirement, I think that will also give you a lot of confidence and put you in good stead, by the time you start investing properly for your retirement goal.
All right. Last question to you on this particular topic. Now, let's just focus on retirement, okay?
Right.
At this particular age, if one wants to plan the retirement, what are the investment instruments that you may want to consider, and how gradually you also need to increase your investment amount, or even with other goals, in fact, is this the time where you have to, kind of just make or push yourself a little more harder to invest more or as much as you can?
Yeah. So I think, prioritization is extremely important, right? So if I were a 40-year-old, I
True.
would sit with my wife, if I'm a husband, I would sit with my wife and list down all the important things that we have to get done, right? And let's say one of the important things amongst that is, take a vacation every year, right? But that might come at the expense of planning for my child's education or planning for my retirement. So I would obviously put that slightly lower down the order, right? Similarly, I think a lot of us have these consumption goals, which are good to have. Like, obviously, we all want to have a nicer car, have a nicer house, right? So those are consumption goals. So I think the first thing that I would do essentially just prioritize, right? So if I need, let's say, 30,000 a month for my child's education, 20,000 a month for my retirement, and let's say 10,000 a month for my, let's say, funding my vacation every 2 years. So but I'm saving only 50,000. So obviously, it's very clear that the vacation goal sort of sits out, right? And maybe I just need to find cheaper ways to do my vacation, or sort of, sort of pause on vacations for next 2 years. I think prioritization is extremely important as a couple. I'm sure you're as a couple by now. So as a couple, you need to prioritize what your, goals are. And in that order, sort of start saving and investing for that. And I think in investing, if your goal is, I think it's fairly simple. If your goal is longer term, then you sort of move a little bit more towards equity. But if you need money, let's say 2-3 years from now, then obviously you need a higher debt component in your investing strategy.
All right, Aditya, thank you so much for being on the show and helping our viewers, especially the 40-year-old one, as to how can they strategize their financials. Thank you so much.
Thanks, Kavita. Happy to be here.
All right, next up we have Leaders of Tomorrow, looking into the evolving e-commerce and retail landscape of the country. In the first segment, Shailesh Jain, co-founder, Mirror, shares his insights on the amalgamation of sustainability in the ethnic wear market, while highlighting the need to promote smaller artisans and businesses of the nation. In the second segment, Krishna Mehta, SVP Executive Director, Godrej India Circus, talks about fostering the growth of coming-of-age designs in the home decor sector, while also stressing on the need to implement the Make in India initiative. Listen in. All right, welcome back. You're watching The Money Show with me, Kavita Thapliyal. And now let's shift focus to annuity plans and discuss all that you need to know about it with Amol Joshi, founder, Plan Rupee Investment Services. Amol, hi, good evening. Welcome to the show. So we are going to talk about one of the most important aspect of your retirement planning, or rather one of the investment instruments which a lot of people consider is an annuity plan, that you get from insurance companies. Typically, what is the nature of these annuity plan, and how do they give you, how do they actually give you the benefit of having a regular income after retirement?
Right. So annuity plans are typically, the way they work is you deposit a lump sum, and especially this is used by retired people or people who have called it a day and they're into their sunset years. So you deposit a lump sum. Typically, you get guaranteed returns for a certain period of time, and that certain period of time is for rest of your life. Now, as you can imagine, whenever somebody says guaranteed income, you will essentially have to utilize the fixed income or bond sort of a underlying asset to invest that to invest your corpus into. That is what the life insurance company does. So annuity plans are marketed or provided by life insurance companies. These plans are typically, as I said, you deposit a lump sum and then you get a monthly assured payment. Your next question was how these help into getting a regular income. So actually this is what they do, right? So almost all the annuity plans have the monthly interest coming to your bank account, thereby providing you the necessary support for your monthly expenses. Of course, it depends on the kind of lump sum that you are putting into it.
All right. So now, in order to have a regular income, which annuity plans, provide you in the form of maybe a quarterly payment or 6 monthly or maybe yearly also, depends on the kind of option you've opted for. How can one go back and calculate this requirement? You have to invest lump sum, or the investment pattern also depends on the kind of plan you've opted actually. So what goes on in this calculation of the kind of amount that's needed as regular income?
Right. So Kavita, for that we will have to go into what kind of annuity plans are there. So annuity plans, there are roughly 8 to 10 number of annuity plans. The simplest of it can be called as immediate annuity for life. So you deposit a certain amount, just for the sake of round number, let's say that you deposit 1 crore rupees. Now also imagine for a moment that the payout is at the rate of 6%. So typically you will get 6 lakh rupees annual interest on that, which comes to about 50,000 rupees of payment. Now this is how a typical annuity plan works. However, as I mentioned, there are 8 to 10 variations in this plan. The first one that I mentioned, the simplest one, it takes care of the lifetime of only one individual. Then there are more popular plans like joint annuity for life with return of purchase price. So I think the keywords via name itself, we are able to understand joint life. So you can take annuity on your name. Then in case of, you can also have a joint life, which is typically the spouse. This annuity payment will keep coming to you. And after death of one person, it will keep going to the second person. And after death of second person, the entire purchase price is returned to the nominee. Now the percentages differ, but I think I have tried to provide the broad calculation. Annuity, since these are guaranteed plans, the returns are typically lower, and anywhere between 5 to 6%, 6.1, 6.3%, depending on which plan out of these you choose, your payments will differ accordingly.
All right, so clearly it is the way that one can actually opt for when it comes to an annuity plan. But then having said that, is it really an important aspect of your retirement planning, or one can just have it strategize better through different or other financial instruments?
All right, this is a very important question. Now, out of all the 8 or 10 plans that we spoke of, there is only one plan. I'm talking about the largest insurer in the country, and that insurer provides rising annuity payments. So see, we all can imagine that somebody who retires at, let's say, 60 would probably have 20 years of life ahead of himself or herself. Now, having said that, if your annuity for the first month or first year is 50,000 rupees per month, this 50,000 rupees is going to be very, very small 5 years or 10 years later, right? For the simple reason that the inflation will eat away at the purchasing power of this same 50,000 rupees. So annuity is probably not the only product that you should bank upon. What you should typically do, in traditional sense, people used to kind of have second property and take the rental income, because rental income also typically the rent increases year on year in most common cases. And now in modern days, modern times, now that people are familiar SIP culture, as there is a substantial SIP culture in the investors, and people are familiar with the equity asset class. There are people who also kind of accumulate a larger corpus into mutual funds, typically equity hybrid or pure equity mutual funds, and do the SWP from those funds. Since the returns from market over medium to long term are higher, then instead of a 5 or 6% annuity payment, you can from equity probably do something like 7, 8 or even 10% kind of SWP. But without a warning, I cannot finish it without the warning. Equity returns are volatile annuity or not.
Okay. All right, so that's all about annuity plans. But then we move on, and we have our viewer online with us from Andhra Pradesh, Raja Gopal. Good evening, Mr. Gopal. How are you doing today? I believe you have a question about Nippon Small Cap Fund, right?
Yeah, ma'am. Good evening.
Okay.
Yeah, I am my
Okay.
Nippon. Yeah, my Nippon
Any
small cap fund. Fund value is 2.5 lakhs.
Okay. Any
Should I
specific reason you want to
continue in that?
switch? Any specific reason you want to switch to other fund or other same category fund?
Yeah, now markets are in heat now.
Okay.
Is there any further scope in small cap, or should I shift my fund to some flexi cap
No,
or large cap?
but then, isn't this a long-term investment for you?
Yeah, ma'am.
For how many years?
Next 5 years.
Okay. So you are not happy with the performance of this fund?
No, ma'am. I am happy right now. In future,
Okay.
The same performance will continue or not.
That is not guaranteed. I mean, okay.
Because-
Let's talk to Amol about it. So Amol, typically, I mean, although investors are really making money in the small cap space, but then investors like Mr. Gopal are also scared about their profits going away. But then over here, I believe he has a time horizon for 5 years. That's what he said. How do you think this profit playing out in 5 years? Obviously, he needs to be there longer to have the advantage or the benefits of compounding. But at this particular moment, booking profits and shifting to some other category fund, does it make sense? Just because of the fear that your profit will just go away from this category?
Kavita, I think the last bit from your question is the most important part. Whether you should be able to whether you should switch from your existing small cap where you have got decent returns to some other category. Now, whenever we talk about timing the market, people typically think that I have to shift when the markets are up or when I have made decent profits. But this is only half the transaction. Remaining half transaction, since Mr. Rajagopal has 5 years time horizon ahead of him, he cannot just switch to liquid today, because liquid he will get a FD sort of a fixed income kind of returns. Second part of the transaction is when there is a dip in the market, if there is one, which eventually there will be ultimately. During that time, you have to come back from liquid to your equity asset class also to benefit from the long-term compounding, the part that you mentioned earlier. I would say that getting both the parts of this transaction right is highly it's very difficult, if not impossible. So I would like to say that if Mr. Rajgopal, if you have 5 years horizon ahead of you, I would say that you should just continue your SIP. And this is the third part. Since you're investing not in a lump sum mode, but in a SIP mode, even if there were ups and downs and corrections in the way, you will be able to get the averaging, which is the essential, which is typically called as rupee cost averaging or dollar cost averaging. Considering all of this and a decently long time frame that you have ahead of you, which is 5 years, I would suggest just continue your SIP. Just take care that you have also mentioned what is the valuation, 2.5 lakh rupees of this scheme in your entire portfolio. Just see to it that this does not become a large component of your portfolio. Typically, we suggest large cap exposure anywhere between 50 to 60 and mid cap exposure about 40% or thereabouts. So if you stick to this and have long-term horizon via SIP investment, I think you should be good.
All right, so have the ratio exposure right. Thank you so much, Amol, with that, being on the show and helping our viewers with their financial portfolio queries. And time to say goodbye. But then before that, we are in the middle of July, and the deadline of filing your income tax return is fast approaching. In our brand new segment, ITR Pathshala, my colleague Bhavya Dua will simplify income tax return filing for you. And in today's episode, she explains how to file ITR when you have income from other sources. Let's listen in.
There are so many heads in the ITR form while filing the tax returns. There is income from salary, from business and profession, from house property, from capital gains also. Oof yaar, अब ये income from other sources क्या होता है? Hey, are you also confused about the same? Well, this says that any income that cannot be reported under any of the other heads has to be declared under income from other sources and has to be paid tax on. But what all actually comes under income from other sources? Come, let's take a look. The first one is interest income. Now, most of us hold bank accounts where the banks provide interest on the account balance. Additionally, many individuals invest in fixed deposits with either banks and or post offices as well as in other financial instruments to earn interest. Now, it is important to disclose this interest income as income from other sources when filing your taxes. However, taxability of interest income depends on the nature of the income. For instance, savings bank interest income is only taxable over and above rupees 10,000, while interest on PPF is tax exempt completely. The next one is dividend income. Now, apart from the interest, the other type of income that many people have is dividend earned from investment in shares and mutual funds. The taxability of dividends depends on the nature of the dividend. Now, dividends received from shares and mutual funds are subject to tax as per the marginal slab rates applicable to the individual taxpayer. But the taxability of the dividends in the hands of REITs unit holders depends on the taxation system opted for by the special purpose vehicle. The next one to pay attention to is gifts received in cash or kind. You may not think that gifts are taxable, but according to regulations, gifts received by an individual in a financial year are exempt from tax only if their total value does not exceed rupees 50,000. So if the value of your gift exceeds rupees 50,000, it is taxable under the head income from other sources, unless it is received in marriage from a relative who is your spouse, brother, sister, or spouse's brother and sister, or the parents of the recipient, or under any will or inheritance. The last one to look at is income from lottery or prize money. Income derived in the form of winnings from lotteries, competitions, races including horse races, card games, gambling or betting of any kind is categorized as income from other sources. They are subject to a flat tax rate of 30% without any exemption. Therefore, the payer of the prize money typically deducts tax at source from the winnings and disperses the rest to the recipient. So make sure that you do not miss out on filling in this section while filing your returns. And hurry up, because 31st July isn't too far now.